Trump's 90-day tariff truce with China shakes global trade markets. The 12th of August 2025, in a high-stakes, last-minute move, President Donald Trump signed an executive order, delaying sweeping tariffs on China for another 90 days, narrowly avoiding the expiration of the current trade truce. The extension, now set to lapse on November 10th, offers both economic superpowers a fragile but critical window to strike a deal and prevent an escalation that could jolt the global economy. Beijing responded by suspending planned tariff hikes on U.S. goods for the same period while keeping a 10% base tariff in place and promising to address non-tariff barriers. U.S. Treasury Secretary Scott Bessent expressed cautious optimism after last month's tense talks in Stockholm, suggesting that the makings of an agreement are on the table. Without a deal, tariffs could spike to 245% on Chinese imports and 125% on U.S. exports, risking a full-blown trade war. Trump has also urged China to quadruple U.S. soybean purchases to cut the trade deficit, while current penalties tied to fentanyl smuggling allegations already push Chinese import taxes to a combined 30%. Economists warn these measures are stoking inflation, with Goldman Sachs estimating U.S. consumers have absorbed 20% of tariff costs, a figure that could jump to 67% under new hikes. In a related twist, chip makers NVIDIA and AMD agreed to pay Washington 15% of revenue from advanced chip sales to China in return for export licenses, a deal former U.S. trade negotiator Stephen Olson warns could set a precedent for the monetization of trade policy.
Proudly sponsored by Nepal Art Shop Export and Import PVT, Ltd., your trusted source for wholesale Nepalese products. Visit us at nepalartshop.com